I'm in Phoenix.
Oh, right. You said Arizona. Yeah, my parents live in Goodyear in a
Mhm.
like a retirement community. Um, so I want to kick it off. Thank you so much for doing this. I'm so pumped. We originally met at the Driven conference, and I was interviewing people, and you were standing there, and I interviewed you. And I have to be
Yeah.
honest, I'm a real estate investor, and I had heard of self-directed IRAs for a long time, and it really had no freaking clue what that actually meant. And so I've been researching it. I didn't realize that you were part of the loan and own community. Otherwise, I would have reached out to you because I'm currently in the process of doing, I bought a piece of real estate with the self-directed IRA, but I thought it would be a great opportunity to let you have a platform to talk about what you do. And I want to, put this recording out to our whole community because it is such a clutch move using self-directed IRA for real estate. And you can use it for anything. I'll let you explain, but
Mhm.
the majority of people have no freaking clue what a
Yeah.
self-directed IRA is or what it can do.
Yeah.
So I just introduce yourself and just kind of give us the pitch.
Well, I'm a wrestler in the history of my
I
life. So
saw
I
that.
grew up wrestling,
Yeah.
wrestling, lived since I was a little kid, wrestled at Arizona State and tried to make the Olympic team. And then after that, I wanted to get into, finance and do some stuff. So I moved to California and actually was the intention to get into chiropractic school. Well, I kept training. I ended up getting back in California and I worked as a realtor for Keller Williams for a few years. And then I started working at this software company called Time Value Software, and we did time value money calculations. And we did loan amortization. I got into the note investing world where I was training people how to restructure cash flows, calculate returns, create amortization schedules, buy and sell notes. And that's where I learned about uh, Roth IRAs because a lot of these note investors were buying and selling notes in their Roth IRAs. And there were these strategies going around how to put $1 million in your Roth IRA and have tax-free returns. I
Mm-hmm.
was like, man, that's pretty cool. And so, that's what got me in the mindset of it. And I was at that company for several years, and then I came to Directed IRA about 2.5 years ago. A guy that I knew from the note investing world, and did a conference for him as a presentation at his conference, and just got to know him, worked with his loan workout team that he had for restructuring non-performing notes. Well, he's a partner in Directed IRA, so I came over here, got to move back to Phoenix, where I liked, and went to Arizona State. So been here for a couple of years, and
Nice.
Directed IRA has just been a growing company, and just we have two founders that are great, provide a ton of education on YouTube, podcasts, webinars, stuff like that.
Yep.
So
Yep.
kind of the experts in the industry. Yeah, and just before that, actually, uh, you know, you're loan to own, but what's ironic is I learned about this slow flip thing
Right.
from some directed IRA clients.
Interesting.
I read the book, I
Yep.
joined their community, and then that's where I saw you on there, and I was like,
Right.
wait, I know that guy.
Right. Yeah,
I didn't
and
know.
full transparency, it's loan and own is very similar to slow flip. I have a few tweaks
Oh, okay.
that make it unique to what my mission is. I'm very mission driven as far as like providing affordable housing for people that would never qualify for traditional mortgage, but very similar business model. I've read the book, and so, but it's important to also highlight you can use a self-directed IRA for not only any real estate investment, but any investment. I mean,
Yeah.
you could buy any investment. There are certain rules though. So let's frame it within the context of real estate because that's who's going to be watching it. But yeah, I mean, it's kind of like this hack that
Yeah.
people
I
don't
mean,
know about.
I'm kind of looking forward to doing some of these slow flips in there because,
Yeah,
I don't know how old you are, but I'm 52.
I'm
Start
47.
doing up those slow flips that, pretty soon,
Yeah,
5 years, those things start coming through. You get those in a Roth IRA. I mean, geez,
right.
that's like golden, right?
Right. Yeah, so let's start from the what is a self-directed IRA? I want to walk you through because I know the questions that I had, and I'm sure people are going to have this. So I want to kind of walk you through what my confusion was. So first off, what is a self-directed IRA?
Well, first of all, an IRA in itself, an IRA is an IRA is an IRA, regardless of whether you have it at Fidelity, Schwab, or directed IRA. what makes the difference is the custodian that holds that IRA. Because we're a self-directed custodian at directed IRA, that makes your IRA self-directed. Whereas you go to Fidelity, Vanguard, Schwab,
Mm,
they sell you what products they have, which are stocks, bonds, mutual funds.
hmm.
Okay. But that IRA is the same, regard whether it's there or here. But we don't sell products at directed IRA. We provide the vehicle for you to invest in whatever you want, and we will
Okay.
custody or we will hold that asset for you.
Okay.
Um, and so, self-directed IRA, basically, you can take that IRA, traditional IRA, Roth IRA, and you can invest it into pretty much anything that the IRS allows. There's only three things that you cannot, which are life insurance,
Hmm.
collectibles, and S corporations.
Okay. What do, how do I open a self-directed IRA?
It's very simple. A lot of people, think that it's kind of complicated, and I think sometimes that deters them from moving forward.
Hmm.
And the other thing that maybe deters them is they're used to having to manage at a brokerage firm or financial advisor, and they come here and they're like, "Oh, I have to go find my investments and bring them to you,"
Hmm.
right?
Hmm.
But opening it and getting it set up is very simple. It's basically three steps. You open the account, you fund the account, and once it's funded, you can invest the account. So open the account, very simple. You go online, like a directed IRA website, probably takes you 10 to 15 minutes to fill out an application. Boom, you get an account number right there and access in your portal. Usually it's the following day, usually that account is officially opened. And you pay, $50 account opening fee to get it open. Annual
Hmm.
account fees, directed IRA are $4.95 a year. But
Hmm.
very simple to get it open. As soon as you get it open, the way you're going to fund it, you're either going to make a contribution from your personal bank account.
Okay.
You're going to transfer from another existing IRA or Roth IRA that's at Fidelity or Schwab or,
Hmm.
Empower or whatever
Hmm.
custodian
Right.
you have. Um, and the transfer is via wire from another IRA,
Okay.
or it comes from an employer plan, which is probably one of the most common ways, like
Yes.
401ks, 403bs. And when somebody leaves the company, whether they get laid off, change jobs, or get retired, that 401k is available. And
Right.
what a lot of people don't know too is that if you leave one company and you take that 401k and you go into another company, and now as part of your new 401k plan, well, you can take that older chunk out and you can
Okay.
still roll that out. That's called a
Okay.
direct rollover to an IRA. It's a
Hmm.
non-taxable event. There's no
Right.
penalty, just a lateral transition to like kind
You,
account.
what you said is so important. I just want to kind of go back and highlight it again. I've spoken to two different people. One I was coaching, and one was my best friend. And no, almost no one realizes that when you leave your current employer, you have the opportunity to take your 401k and roll it into a self-directed IRA. The biggest challenge that I hear from people is, well, I don't have money to get started. And I have spoken to two people that
Mhm.
both said that to me. And I said, do you have any 401ks? My best friend said, I actually have two 401ks from two previous jobs. I think they're just sitting there. And I said, oh my God, you have the money. You actually have the money. I spoke to someone who I went to high school with, and she's like, you know what? I know we spoke 6 months ago. I still haven't done anything. And I don't have the money, and I don't have experience in real estate. So I feel funny going and asking people for $30,000 to invest. And I said, wait, did you just say you're in between jobs? And she's like, yeah. I was like, did you have a 401k? Of course she did. What are you doing with it? I have no idea. It's just sitting there. And I was, oh my gosh, like,
Yeah,
it's just a perfect example of you don't know what you don't know. And
exactly.
that little nugget is by far the most important piece in my mind, because almost everyone has a 401k at some job, and it's
Yeah.
most likely sitting there. Most people don't even roll it over into their new 401k, like you said. They don't even do that. Yeah, that's great. I just think this is. I wanted to interview you because I think education is just so key, and that's why right now the loan and own community, it's completely free. I offer it free to everyone because I just feel like that's what's holding people back is they're scared of the unknown. And the low known strategy, the slow flip strategy, by far in my mind, is the best way to invest in real estate. One, because you're leveraging a small private money loan or a self-directed IRA, and you are getting in and selling it on a 30-year note. You're not doing any repairs. That's what's so key, is you're not doing any repairs. You're selling it to someone that would never qualify for a traditional mortgage. And that's the majority of America. I mean, even me in LA would probably not even qualify for one of these mortgages out here. So I just think it's so important. What, you said you were turned on to slow flips by someone actually using a self-directed IRA. Can you just kind of run us through the process? What are the rules? Okay, because there are some rules. So I buy a property with a self-directed IRA. What can I not do?
Yeah. So
it's called triggering a tax event, and which is what you do not want to do.
Well, there's a couple of things, and there are what's called prohibited transactions, and these are IRS rules for basically most commonly who you can transact with are the most common. So, and that's basically who your IRA is going to do business with, and transaction could be loaning, buying, or just extension of credit, that type of thing, or extension of benefit and getting personal benefit from it. So, and it's a small niche of people. So my IRA, for example, cannot transact with me as the account owner,
right,
my spouse, and any lineal family like parents, grandparents, children, grandchildren, and their spouses.
Okay.
However, your IRA can transact with your brother, your sister, your cousins, aunts, uncles,
really,
even your parents, the in-laws on your spouse's side. Yeah. So,
interesting.
yeah, and those are the most common. I'll get somebody that I talk to that, they want to buy property from themselves,
right,
or an entity that they own that owns
right,
the property. It doesn't matter. You're still, if there is a disqualified person on the other end that either owns at 100% or down to 50% of that asset, then it's considered a prohibited transaction.
right. And for those that don't know, that means that you will then be taxed on your retirement account, which is what you do not want to do. The beauty of why this works is because you're not being taxed. You're using your retirement account to purchase a property in this situation, and you're not being taxed. And now, if you were to take that money out and buy a property with a traditional Roth IRA, 401k, you're going to get taxed. And it comes out to what? Doesn't it come out to like over 40% of it is
Well,
taxed?
you're not going to have tax and penalty, but you may lose your retirement account through prohibited transactions.
Yeah. Yeah.
So, and the other thing that people think is that they actually have that they're taking the money out of the IRA, but you're not taking money out. The IRA is the investor. That is the entity that is going to be buying the property, or loaning the money or whatever. So, and the thing you mentioned earlier, which is great with people moving their 401ks and not knowing, hey, I can get into real estate with that. But a lot of people like yourself or me are the real estate investors. There are those people that have 401ks that could be your lender. My situation was kind of like yours, and I had a friend that I grew up with, and I'm from Ohio, and this is where I look for the slow flips is in Ohio. But a buddy of mine, he came to me and knew what I was doing and said, hey, I've got an old 401k plan. I almost forgot about it. I went and looked it up, and it's losing money. Can you help me do something with it? So I have an IRA LLC for Ohio. I helped him get his 401k into a self-directed IRA. He became my private lender for a property that I bought in Ohio. So it's kind of, and we sold that to a self-employed business owner on owner financing who wouldn't have otherwise been able to get a loan.
So it kind of sounds like you did a bit of a slow flip there yourself, in a way, got a seller finance deal.
In a way, that was a wrap.
Yeah. Okay. A wrap. Yep.
But similar process.
Right. Yeah. And so that's really important, is that a lot of people don't want to be real estate investors. They want passive income. So you can be a lender. In this situation with loan and own, someone could loan me $30,000 from their self-directed IRA, I could buy the property, sell it on a 30-year note, do what I do. And then that money that I'm paying them back, it's a 5-year term. It would be the exact same 5-year term, 12% interest. Instead of paying them, I'm paying it directly into their IRA. And that is a very important rule. They cannot touch the money, correct? It has to go from me right into the IRA trust.
That's right.
And what's interesting about that is you're getting your retirement account funded by the investment. So for me, as an example, because I've done it, I'm not currently putting money into the 401k that I have at my current job because they don't match yet. So for me, there's no point. But when I sell that property on a 30-year note and I'm getting $895 a month, that's going right into my self-directed IRA. My retirement account is being funded by someone else who bought this property. I'm not even putting money into my own retirement account anymore, because honestly, $895 a month is more than I was putting in myself. So if you look at it that way, your retirement account can be funded by someone else.
Yes.
Yeah. It's fun. And what, you can't touch the money until you're 60 or what?
You're 59 and a half.
59. Okay.
Yeah. Yeah. So it's, if it's a traditional IRA, it's going to be tax deferred until you take it out. If it's a Roth IRA, it's going to be tax free forever.
Right.
So
right.
Great passive investment for anybody that's holding that in the Roth IRA.
Right. And to get, to say someone didn't keep the house for 30 years and they sold it. So all that would happen is that money, usually I'm buying a house for 20,000, selling it for 69,000. If they turned around and sold it, I would then have to take that 69,000 and then that would go into the self-directed IRA. But I could turn around and then buy two $30,000 houses, correct?
Absolutely.
I can still take that money back out and buy more, right?
Absolutely. Yeah.
Okay. So if you look at it that way, you can actually even really start to scale your IRA with real estate investing. And I mean, if that was a situation, I almost want someone to sell the house, because then I would get 69 grand. I'd turn around, buy two more properties, $895 a month times two. Now I'm putting over $1,600 a month into my IRA. I mean, it's mind blowing. It's completely mind blowing when you think about the possibilities. I feel like people can be short-sighted. I mean, what are some of the objections or some of the questions that you get surrounding self-directed IRAs and investments?
Well, it's funny because this kind of leads right into this answer here, because you're talking about when you lend money out and they're paying that off, they pay the house off, it goes back into the IRA, right? One of the biggest complaints people have is that I can only put $7,000 a year into my IRA and my Roth IRA.
Yes. Right.
So I don't know if I can justify the cost of paying $495 a year for an IRA when I can only put $7,000 a year. Right. You just gave an example that all of a sudden you can have $1,600 a month coming back in off $30,000. I had a client recently. Now, keep in mind, you can have traditional IRA, Roth IRA. There are also these specialty accounts, Coverdell Educational Savings Account, a health savings account. They all function the same way. But in a Coverdell Educational Savings account, you can only put $2,000 a year in there.
So wait. I didn't even think of it, because you can only put $7,000 a month into an IRA. I do Roth. So are you saying with a self-directed, I could put in, it's unlimited a year?
Okay, here's another difference, and maybe a little confusion, is that the way that the money goes in, is a personal cash contribution from my bank account. I can only put in $7,000 a year. Unless I'm age 50, I can put in an extra 1,000 catch up, making it 8,000. Now, when those funds come from another IRA, a 401k, there's no limit on how much you can transfer or roll over from those accounts, nor is there a limit on how much your account can earn. So you make an investment, no matter how much is coming back. I mean, the epitome of the Roth IRA is Peter Thiel. He started with the same Roth IRA that everybody else does. For his $7,000 or $10,000 that he started with in there, invested in the PayPal, turned it into $5 billion.
Wow.
Tax free.
So because it's not a contribution, it's earnings. You can do unlimited.
It's income from your investment.
Wow, I didn't even know that. That right there is a complete game changer, because you can only put in $7,000 a year into an IRA, and it's like for a lot of people, look, that's a lot of money. But if you're trying to really invest for your future, $7,000 is not going to cut it. You really need to be able to pump some numbers into it, especially me. I'm 47.
Yeah.
So, someone that's in their 30s or 40s that's maybe been slacking on investing, I had a 401k, it had 30 grand in it. Big whoop. I
Mhm.
can't retire off that. But now I'm taking it, I took it and I bought a house all cash. And now again, I'm going to have that retirement account funded every single month by someone else. And it's another interesting thing is with my Roth 401k, I was doing the full company match. And I always say for me, the only point of doing a 401k is for the company match.
Right.
So a couple years, I had 30 grand, but half of that 30 grand was funded by my company. So I
Mhm.
basically just bought a house all cash for $15,000. That's going to be cash flowing $895 a month. And when you start to kind of really think about the possibilities of real estate investing and how it can help. I just, unfortunately, people don't know this stuff. I mean, and
Yeah.
this is such a key piece that
Mhm.
so many people have access to what you're saying and they don't realize it, you
Yeah.
know? Um,
Well, we just had there was a stat today that I just learned about our accounts, and the majority of our accounts, let's say 60%, 64% of our accounts are with clients that are between the ages of 50 and 70.
yeah. Wow.
People that are younger just don't know about it. I mean, the people
Yep.
that are calling when they're in their 50s and 60s are just learning about it.
Yeah.
And
Yeah.
the one thing I wanted to make, on those low dollar amounts that, the Coverdell and the HSA is I had a client recently, was in real estate. He was a wholesaler or starting to do some wholesale deals. He put the limit in his kid's educational savings account, his Coverdell,
Mm-hmm.
put $2,000 in. I think he took $500 and got a house under contract and turned that into like 20 grand in 2 weeks from a wholesale deal.
Wow. So wait. So what? I want to make sure I'm understanding. So when you say your kid, are you talking about like a 529 account?
No, it's a Coverdell ESA, which is Educational Savings Account.
How is that different from a 529?
They're just different. I'm not sure,
But
the
is it
nature
like
of them,
it's an account just for
just for education.
education? Okay, so
Yeah.
to me it sounds like the same thing. So okay,
They're
that's
similar, but they have different,
wow. So
amounts you
wait,
put
I
in.
didn't even know
Yeah.
that. So I have my daughter's got a couple different 529 accounts. Could I roll over a 529 account into what you're saying?
You cannot, because they
Okay.
are separate and distinct from each other. They kind of
Okay.
have their own rules, and just they just function a little bit differently, even though they're both for academics.
So
Um,
maybe could can you highlight any of the points that might make it different that you're, because I knew nothing about this and now I'm thinking, you know, sis, why would I use your account opposed to a 529?
well, one, you can self-direct it into alternative assets.
What does
Um,
that mean?
that means that just like a self-directed IRA, Roth IRA, I can basically invest in anything I want, with the exception of life insurance, collectibles, and S
Right.
corporation. So when we're talking about real estate or whatever, you know, I think I put my first house in my IRA under an option for $100, and the guy, gave me a 60-day option. I ended up buying the place and borrowing from my buddy's self-directed IRA, but I got it
Wow.
under contract for $100. If I would have turned around and sold it and made a $20,000 profit, it would just come
It
back
goes
into
right.
my
Right.
IRA, which is similar to what the gentleman did for his kids' ESA, his Coverdell Educational Savings Account. He put $500 to get the house under contract, and then he
Mm,
got the wholesaler fee it back into that account and took it from $2,000 to $20,000.
wow. Okay. This is
Now the
amazing.
Coverdell, you don't it, you which isn't a lot, but you don't get a tax deduction for it going in, but it's tax free coming out for educational expenses.
What
You,
what happens if I don't spend it all on education expenses? I know they just said like a 529, you can roll it over into like an IRA if you don't use all the money. What happens if I don't use all the money?
well, you have up until 18, to the kids 18 to contribute up to 30, age 30 for them to use it.
Okay.
If they don't use it, you can pass it to another kid.
Okay.
Younger kid could be kid in your family, doesn't necessarily have to be your own kid.
So it would absolutely have to be used for education. Could you buy
They,
laptops and
yes, the
okay.
list is extensive. It'd be worth
It's
looking
okay.
at because they're going to be paying for a lot of things that you probably wouldn't even imagine that you
Right.
could pay for, like laptops, computer stuff like that, or going to museums or whatever. Your kids could be homeschooled, right?
Right.
Same thing
Right.
with a health savings account.
Right.
You get a tax deduction going in, tax-free coming out for qualified medical expenses, and you
Right.
can use that for the same types of investments.
Right. Right. Wow. Yeah. I mean, I didn't know about the Coverdale. That's interesting because then you could again buy a house and then whoever, sell it on a 30-year note, and now you have someone funding your child's education account. I mean, it's
Well, think about this too, because these low dollar accounts, if you're talking about like slow flips and you're talking about somebody you meet that's got a 401k and they didn't know that they could do this, and they can be your private lender, let's
right.
say for 30 grand for that deal. It doesn't matter which account you use. You could use your ESA, your HSA, traditional IRA, or Roth IRA for that deal. Now, and the money is going to come back into there. Now any one of those accounts can own an LLC. And
Right.
that LLC would be your entity that uses
Right.
your retirement funds to buy that property.
So yeah, and a lot of people don't realize too, you can use your health savings account to invest and um now when the money goes into a self-directed IRA, then what do I how do I invest? What do I do? I have to pick out the mutual funds and or like
Yeah,
how does that
good
work?
question. Good question. So at directed IRA, you don't have a brokerage account. It's not like being at Fidelity or Schwab or something where you open an account and you're immediately in a brokerage. Um, if the money's going to be sitting there idle, not earning a return until you put it to work. So you have to find your investment, and that's sometimes
Okay.
eye-opening to people. But a lot of people that are in real estate are already in real estate. They're already doing these deals, and they just learned that they could do it in a self-directed IRA.
Okay. So
So
your money is not making interest sitting in your self-directed IRA account. Is that
yeah,
correct?
yeah, you can
Okay.
make a stock trade, but you don't have a brokerage account. For most investments you would do right out of the IRA, there's what's called a direction of investment form. You're going to fill out saying, "Hey, directed IRA, I want to lend this money in a secured promissory note to this real estate investor,
Mm-hmm.
or whatever that investment is. Could be unsecured, it could be a secured promissory note, it could be
Mm-hmm.
whatever it is that you want to invest in. You fill out that investment form. There's going to be supporting documents. So if you're loaning money for real estate, you're going to need a copy of the note and the deed of trust or mortgage, or whatever for that, and then it'll be funded in 2 to 3 business days. Funds will be sent out via ACH or wire to the borrower.
So am I not able to buy a mutual a
Yeah,
mutual fund through a
you
brokerage
can.
account with
You
it? I just
can.
have to do it.
No, if we would do it, you'd fill out a form and you'd say, I want to buy, Amazon stock, or I want to
Right.
buy Tesla. You fill out a form and we would make the trade for you.
Got it. Okay, so it is doable. It's just
Yeah.
not this maybe as seamless as you go on, Robinhood and just buy. There's just
Right.
a process. Okay, so that I mean that's still great because I mean technically that that's an investment itself. So you just need to be actively finding the investments, whether it's stocks, real estate, whatever, private money lending, and
Yeah.
so this is for someone that wants to have a lot more control over
For
their,
sure. They
over
can
their
take control.
investments. Yeah,
Yep. And most of our clients will have accounts at Schwab
sure,
or Vanguard or Fidelity or whatever. And what they do is they'll have their IRA over there and they will move a chunk of it over here when they find an alternative asset,
got
and
it.
they'll use that to buy that property or crypto or precious metals or into a private company or whatever. We're just talking about real estate, but there's so many things you can invest in. And
Mm-hmm.
then they'll have their stocks and mutual funds and bonds over at Fidelity or Schwab or something. And then they'll just move chunks over as they find an alternative investment.
Can you so you can move chunks from your IRA to your self-directed? Can you move them back?
You can.
You can.
Yeah,
Okay.
from IRA to IRA, you can go back. The only way you can't go back is if you have your 401k or your 403b or whatever from your employer plan. When you leave that company and you do the direct rollover out of there, they're going to want you to move the whole thing out.
Sure.
Now,
Sure.
you can't move that back to a 401k, or
Right. Sure. Sure.
even if you're a new employer, you couldn't move that back. But
Okay.
moving back and forth from IRA to IRA, Roth IRA to Roth IRA, you
Right.
can do that at any time.
And are there and so there might be fees, but it's not a taxable event. So
Right.
there might be like transfer fees, but it's you're not going to get dang for 30 or 40%
You're gonna pay like
fees.
$25 or something
Yeah.
to transfer out.
Yeah. What I mean, what else should we be aware of, or what? I mean, I've learned stuff from you that I didn't even realize. That Coverdale, the Child Education Fund. I think it's going to be very useful, especially like I said, I'm, a guy in my 40s with a full-time job and a family. That is exactly who I think would benefit from something like this. But, anything else worth highlighting or pitfalls that you kind of need to be aware of?
Not really a lot that you need to be aware of. I mean, the founder here at Directed IRA, co-founder Matt Sorensen, he wrote the Self-Directed IRA Handbook. It's a great resource. It basically has everything in there that you would need to know. But the most common things are prohibited transactions that have to do with who you're transacting with.
Mm-hmm.
Because a lot of times people somehow want to transact with themselves in a
Yep.
roundabout way, whether
Yep.
they work for a company that they want to invest in, or their CEO, or on the board of directors, or they own a property in an LLC and they want their IRA to buy it, or
Right.
loan money to it that they want to build. Those types of things you just have to be aware of. Most
Mm-hmm.
of the time we can answer those. But if not, our sister company is a tax law firm and they do this all day and they can always help people with whatever it is.
Yeah.
The other thing I would say that is a great opportunity for people if you're self-employed business owner with no employees
Mm-hmm.
and your business has to generate ordinary income because we get a lot of this from landlords that own a bunch of rental properties and passive income doesn't qualify. But this is for what's called a solo 401k
Okay.
plan. For self-employed business owner, if you're a realtor, it's great. You're
Okay.
starting a new business, it's really good because you can roll your 401k into the solo 401k and you can use that for investing. And the solo 401k is great because you can put 10 times the contribution in a solo 401k depending on your income of your business. So, whether if it's net income and your net income 70,000, you could contribute 70,000 in that year compared
Mm-hmm.
to 7,000 in an IRA.
I was just going to ask, why would you do roll it into a solo 401k versus an IRA? And yeah, you
That would
answered
be
that. So,
one, and you can have both Roth and traditional contributions in there. So when you make their contributions, you can say,
mm,
well, I want to take a tax deduction. I'm going to make that traditional
okay.
contribution, which is going to be tax deferred. Down the line of retirement, you're going to pay that tax. Or you say, you know what, I don't need the tax deduction. I'm going to make it as Roth 401k contribution, and that's going to be tax free.
So good.
Those are
Good.
great.
Good.
I mean, that's probably the most robust
Yeah.
self-directed plan if you qualify. But otherwise, Roth IRA is going to be key for tax-free returns. Most commonly, obviously, traditional IRAs because most people have a 401k at
Yeah.
a job they're at or some sort of employer plan.
Yeah.
And these days, people are getting laid off, leaving companies, changing jobs. Like
Yeah.
there's a lot of
I
money out there.
when I get so excited now when someone tells me that they got laid off or they quit. I'm like, oh my gosh, do you have a 401k? And because that it just takes, I always say it's the first property is the most important because it proves that you can do it and that all this hocus pocus I'm talking about is real. People
Works.
think it's a scam because it sounds so good, you
Yeah.
know. And then you throw in this self-directed IRA and they think I'm a complete nut job. I'm like freaking out. I'm like, all right, well, I'm doing it. I don't ask anyone to do anything that I haven't done myself. So
Yeah. Yeah.
that's what I could say.
I
So,
do the same, being here when I talk to people, I've got my Roth IRA, I've got a crypto Roth IRA, I've got an IRA with an LLC, I've got an HSA.
jeez.
So I'm doing those things.
Yeah.
And, like I did, last year I did a Roth conversion to my Roth IRA. So I got to
Mm-hmm.
pay the tax on that. And I bought a note. Bought a discounted note on land. I mean, it's the most ironic thing that you couldn't even plan for because the
Right.
guy at the borrower had passed away. Well, my Roth IRA owned the loan on that land that he was paying on. His family called and said, "We can't afford it. We don't want it. Can we just
Right.
give it back?" And essentially,
Nice.
my Roth IRA was the bank, right? The
Right.
lender holding the loan.
Right.
So my Roth IRA ended up getting that land back.
Right.
So it's actually now I'm in the process of selling that land. I'll probably, it'll sell it for twice as much as what
Right.
I bought the note for, and I'm going to sell it on owner financing. So I'll get the returns of,
Yep.
probably 10% annual
Yep.
rate on top of that.
And that'll all go back into
Into
your,
my Roth IRA.
IRA and
Yeah,
now it's being like basically self-funded, not through yourself. So
right.
it's like
Yeah.
that's amazing. So where can we find you? I want to send people your way. Where do they find you?
You can find me, you can make an appointment with me at the Directed IRA website by going to make an appointment. If you scroll down, you'll see Markus Mollica there.
Okay.
If you want to email me, so I don't have something to pop on the screen right here, you can email me at marcus Mollica at directedira.com. Marcus is MARKUS dot Mollica, MOLLICA at directedira.com.
I'll put links everywhere, and more importantly, you are in the loan and own community. So anyone that's watching this in the community, you can just direct message him right there, and I'll be sure to link everything. But thank you so much for the talk. I know I learned something, so I love that. And I'm sure that other people will as well. But if you have any questions for me, of course, you reach out. But if you have questions for Marcus, clearly he is an expert in what he's doing. Reach out to him. He'll get you set up. And thank you so much for the knowledge and taking the time to kind of educate us, Marcus. Really do appreciate it.
Oh, you're welcome. My pleasure. Thanks for having me on, Matt. Appreciate it.
Take care.
Talk to you soon.